What's going on, guys? Welcome back to another portfolio update. So as you guys can see, the SP 500 has had a pretty good week, up 3.62%. So that should mean my portfolio has done well, right? No, not so much. As you guys are well aware, we had Tesla earnings last week, and as soon as we saw Tesla earnings, we had a massive drop just because they did miss on expectations. However, technically they beat from the original expectations, but obviously, after we saw that massive delivery number beat, all of Wall Street just rose their expectations, and they also had some unexpected, like one-time costs, so they did miss on Wall Street earnings. Although I felt generally the earnings was really well, they did really well, because what people I think skipped over was they focused too heavily on the earnings and not enough on other metrics like the free cash flow. The free cash flow came at all-time high, nearly 4 billion a quarter. Now if we annualize that, and then do instead of instead of doing a price to earnings ratio, we do a price to free cash flow ratio. Tesla's trading for 86 price to free cash flow if you annualize their Q3. Now, obviously, I'm not suggesting that we take that number and just use that number, because obviously this quarter could be a one-off and it could be exceptionally high. I do expect the free cash flow to fall in the next 2 quarters, so it's not the best metric to use. But just say we use that number, and over the next trading 12 months, it is 4 as an average, because I do think we'll go down in the next 2 quarters in terms of free cash flow, and then we'll start to grow back up. And I do think year over year, free cash flow will increase. So I think Q3 of 2026 will have a higher free cash flow number than this year. So we could still use that over a trailing 12 month. It could still 16 billion could still be accurate if we take from now to 2026, or at least just do full year 2026. That puts Tesla at a price of free cash flow of 86, which is really good if you look all of that gross prospects. So yeah, I think Tesla is a buy right now. I look at all of these. Obviously, this is not financial advice. This is just my opinion. But if you look at all of the other companies trading, especially AMD, AMD is trading for a massive premium. Now, I get that they're going to increase revenues massively with the OpenAI deal, but you're also going to get a 10% dilution. They're giving away 10% of the company, and that's a lot. Now you could say even if it doubles revenues, which it could, that's giving 10% of the company away for doubling the revenues, when it's a one-off doubling. There's no guarantee that it'll continue. However, with OpenAI having ownership in AMD, they'll want AMD to continue to do well, so they could continue. That revenue that they're getting could become permanent. However, with Tesla, we're going to see that we're giving Elon 10% if this new pay package goes through, but you'll get 7.5 times. So it's not just a doubling for giving up 10%. Tesla shareholders will be getting 7.5 times when giving up 10% of the company. So that's kind of why I'm looking at AMD and like, ooh, I don't really think it's a good deal, because when Tesla investors give up 10% of the company, they'll get 10% diluted. For the Elon Musk's pay package, we're getting 7.5 times return. So that's why I'm not really liking AMD and some of the other valuations. Like, obviously they're good companies, but that's the problem with right now. All of these prices are so expensive. And I think Tesla, yes, it's trading for a premium, but when you factor in the wider market and that everything's trading for a premium, I still think it's a buy. And that's why I've still been putting money into it at these prices. So what's happened for my portfolio? So right now my Tesla investment is currently valued at £148,000, up 60.83%, up £56,000. Currently own 456.5 shares. Now, I will get that up to 457 just because OCD, I like having the full shares, but I don't mind it if it's just a 0.5 or like a nice point, like a 0.1, 0.2. When it starts to get multiple decimal places, and I'm like, oh, I don't like it. So, and if you look at my other position, Robinhood has had not so great of a month. Obviously, it's still up 10% on the month. But if we look at the month, we were trading for 150. Now we went all the way down to 129. I did buy it. another share around here, or another 2 shares. So now I'm at 10 shares. Now we've had a little bit of rebound back at 139. So currently I'm sitting at £1,000, up 14.38%, up £131. Currently sitting at 10 shares, and my final stock has had a massive correction, pretty much in line with Robinhood. We've all seen a bit of a bounce back, so I'm currently sitting at £475, 6.18% gain, and 10 shares. If you guys couldn't tell, I like having these nice numbers, like with Robinhood 10, IRN 10, Tesla. I will get to. Well, I just think it's such a great company. Obviously, because I've only got £300 in my ISA allowance. Yes, I can get that up to a full number, but I won't get it up to like a 460, or 470. I won't that's the ultimate goal. Sorry, it's just my OCD. Anyway, right now we're sitting at a value of 150,207. We're sitting at 98,500 in net deposits. For the ISA allowance, we've used 19,700. We've just got 300 left, so I'll finish it off next Friday. You just chuck in when I get paid, just use the rest of it up. Sitting at £47 in cash. And yeah, that's currently my investments. I've got 456.5 shares of Tesla, 10 shares of Robinhood, 10 shares of RAN. I don't even know if I'm saying that number right. And if you go into asset allocation, Tesla has actually dropped below 99%. So a lot of you guys will be happy with that. I am adding more to my other positions. So Tesla is dropping as an overall percentage. And now, because I don't have much left for my ISA allowance, it won't drop too much more than that. I think the remaining 300 will go into Tesla, so maybe that'll push it back over 99%. When I started buying these stocks, I kind of wanted to keep it in, that ratio, just because I think the opportunity in Tesla is so outsized. And right now in the market, with everything that's going on, I still think Tesla is a buy, in my opinion. So yeah, even at these prices, I'm still buying Tesla, just because I see from this time next year, I think Tesla could be up another 50% on its current price if you just take 12 months from now. So obviously, not financial advice, do your own research. Tesla is by far the most researched stock, I've done in terms of all the stocks. I've done the most research in Tesla, hence why it takes up such a massive chunk of my portfolio. Then it probably goes Robinhood, then IRN. So anyway, guys, thanks so much for watching. Please make sure to like, subscribe, and share with anyone else who might be interested. Anyway, that's it for me today, and I'll see you in the next one. Goodbye.